So Picton has had a good 12 months. We delivered a profit of £31 million. That's a total accounting return of 6.5%, and that's driven by an underlying increase in net assets of about 2.5%. We increased our EPRA earnings to 4.3p a share. We increased dividends paid by about 2% to 3.5p a share. Dividend cover for the year was about 122%. We also reduced debt and brought our LTV down to below 25%. The other highlight of the year was obviously converting to a UK REIT, which took place mid-year, and there were savings flowing through for half the year as a result. There's been no real change to our strategy. Our aim is still to be one of the consistently best performing diversified listed property companies. We're continuing to invest across sectors and geographies across the UK, mainly in the commercial market, and very much with a focus on total returns, but that being delivered through underlying income rather than perhaps more development type opportunities. 2019 is going to be not dissimilar to 2018. Clearly there's still Brexit uncertainty sort of clouding the wider market. I still think there's going to be a polarization of returns, with a hierarchy probably still led by industrial warehouse logistics outperforming a variation in returns across the office sector, whether you're in London or more in the regions. And I suspect, with the news that we've heard in the last month or so, that retail is still going to struggle, and we're likely to see more declines in that part of the market, certainly in the short term. So Picton, I think, is quite well positioned at the minute. We've got nearly 50% of the portfolio in industrial warehouse and logistics assets, and with a bias towards London and the southeast, and that part of the market we continue to see growth in. Equally, we're underweight retail, and that's a good place with which to be. In terms of our capital structure, we've got relatively low gearing. That's useful in terms of perhaps if there are opportunities in the marketplace. We've got undrawn debt facilities, and also we've got specific initiatives within the portfolio itself where we're looking at enhancing, refurbishing floor space, where we're looking at assets where we can change the use perhaps from retail and leisure to office use, for example, and all of those things we think are going to drive income and value in the short to medium term. So obviously Picton has built up a good track record. We outperformed the underlying property market last year, and we have done now on a 1, 3, 5, 10-year basis. So from our perspective, it's very much continuing with that performance. That's going to be driven, we think, through the initiatives we're doing within the portfolio. Clearly, those are sort of shorter-term initiatives that are aimed at boosting income, but in the short term, we've got to work those through before that income starts to flow through. And then clearly, it's about taking advantage of opportunities if they were to arise in the marketplace as well, and we've got undrawn facilities for that.